Hey everyone, welcome back to Corporate Decoder, the place where we crack open those confusing corporate filings. Today we're diving into OneWater Marine's latest quarterly report. And let me tell you, if you thought smooth sailing was just for boats, think again. This report has some choppy waters ahead. We're going to break down the key numbers and see what's really going on beneath the surface. Buckle up, because we're about to decode OneWater Marine. First up, the basics. This is a Form 10Q, basically OneWater Marine telling the Securities and Exchange Commission, or SEC. What's been happening financially over the last 3 months? This particular report covers the period ended March 31, 2025. It tells us how much money they made, what they spent, and any potential risks they see on the horizon. It also gives us how many shares they have out in the market. This can be useful to understand how diluted the stock is, or how much ownership a single share represents. Now, before we get into the numbers, there's always a section like this, a warning. It's all the forward-looking statement stuff. Basically, the company saying, hey, we're making predictions, but things might change. It's a legal SIA, covering everything from the economy to competition and even hurricanes. They say things like, we believe, we expect, and could a lot. They are telling you that the future contains risks, and for all that we want the company to be doing well, there is always a chance, small as it might be, for the opposite. Okay, let's get to the meat of the report, the financial statements. The most important one here is probably the consolidated balance sheets. This is a snapshot of what the company owns, assets, and what it owes, liabilities at a specific point in time, March 31, 2025 to be exact. We'll compare these numbers to September 30, 2024 to understand how the company has evolved. Let's get right into some key numbers. Accounts receivable net increased from about 73 million to 91.6 million. It refers to the money owed to OneWater by its customers. This could mean sales are up and they are awaiting payment. So on the surface, this looks like a very positive indicator. The inventories are at 602.4 million compared to 500.8 million in September. The higher inventory could be a warning sign. Are boats sitting on the lot longer? Do they have more supply than what they can sell? It means they are stocking up for the hot months in the market, which are during the summer. Now for the scary numbers. Total current liabilities jumped up quite a bit from 607 million to 696 and 96 is XC debt they take on to stock their 3.4 million. This means OneWater owes more money than before. A big driver is those notes payable floor plan, which went from 443.4 million to 509 million. This is basically debt they take on to stock their dealerships with boats. And finally, to the thing that matters the most to investors. Net loss of 0.4 million in the 3 months ended in March 2025 compared to a loss of 4.5 million in the previous year. So at least the loss was reduced. But it isn't ideal. We need to keep in mind that the first quarter is slow season, as pointed out in the basis of presentation section. Finally, it's important to consider the shares, because that means more of a company's ownership and earnings is given away. They say that the basic weighted average shares of Class A common stock outstanding sits at around 16 million shares. Switching gears, let's check out the statements of operations. This report is a bit underwhelming. Most figures are not seeing any major changes. Revenue seems flat and some other metrics had just small changes. We can see new boat revenue is at 309 million, while pre-owned boat revenue sits at 89 million. Selling, general, and administrative expenses, which basically means the costs of running the business, things like salaries, rent, and advertising, were at 87.8 million. Moving on to the cash flow statement now. Net cash used in operating activities was about 9 million. To put it simply, they spent more cash than they brought in, but they got $63,280 from financing activities, mainly from borrowing more money through that floor plan arrangement we talked about earlier. That kind of keeps them afloat for now. So where did the money go? Mostly to pay for inventory, hence that high floor plan debt we saw on the balance sheet. Let's talk about intangible assets and goodwill quickly. These are things that aren't physical, like brand names and customer relationships they got with previous acquisitions. The goodwill sits at $336 million, which is not a small number, and if those numbers ever drop, that could be a problem for the company. Okay, let's talk about stock and shareholders. Stock-based compensation, or shares given to employees, comes in at $4.2 million for the 6 months ended. This means that around $1 million a month goes to the executive team and employees, which isn't too bad given their total income. Let's briefly mention what might come as a shock to many people. Derivatives, they're a financial tool to manage risk. OneWater uses interest rate swaps. This basically means they are trying to prevent their interest expense to skyrocket. It's like insurance. They aren't that big either, worth a couple of millions. As part of their business, they also need to account for things like non-controlling interest, which is a part of a business that the OneWater doesn't fully own. It can get tricky to account for all these numbers, especially in such a large company. The last thing we should mention is the company's perspective of what is about to come. In the report, they mentioned that consumer spending is greatly tied to the economic environment in specific areas and the uncertainties in the global economic state. So what's the story here? On the surface, OneWater Marine is facing some headwinds. Sales aren't exactly booming and they're racking up more debt to keep the boats coming. But it gets a little dicier. The report mentions risks associated with international trade policies, including tariffs. Tariffs could mean more expensive boats, and that's never good for business. The report also mentions some legal proceedings which is to be expected for a company of this size. Now let's zoom out and see the big picture. OneWater Marine is in a tough spot right now. Their inventory is high, debt is rising, and profits are thin. It makes you wonder if the company will be able to keep its head above water. The problem is that OneWater Marine is greatly tied to the US economy and the boating market. The only recommendation for these types of companies is to keep costs low during downturns and make acquisitions during times of growth, which is what they are doing. There's really not much else a company like OneWater Marine can do to face the upcoming storm if the times turn sour. Alright, that's our breakdown of OneWater Marine's latest filing. I hope we made it clear what the company is doing and why it has gotten itself in this situation, as well as what they've tried to do to mitigate the damage. What's your take on these numbers and what they signal for the company's numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.